is Ankit. I am CEO of Wealthy Nivesh, and I am very glad to welcome Ms. Radhika Gupta in our office for this podcast today. I don't think Radhika needs any introduction, but still, for the sake of formality, Radhika is MD CEO of Edelweiss Asset Management Company, and with her, we will be asking some of the questions which are very pertinent for current, and some of the questions from our client side also. Welcome, Radhika.
Thank you.
So Radhika, to start with, 5 macro trend indicators in Indian financial industry from personal investment side.
From a market point of view, I guess. Generally when one looks at markets, one looks at market valuations. One likes to look at market earnings growth. I think these are 2 significant indicators. One likes to look at the trajectory of where interest rates are going. The fourth one likes to look at the direction of GDP growth. I mean, these are 4-5 big ones.
Great. And what will be your advice for first-time investors in mutual funds? We were just discussing this data that from 15 million we have gone to 25 million, and now we have 40 million mutual fund investors in India. So certainly a lot of first-time investors are coming into mutual fund industry. So what is your advice for somebody who is looking to invest for the first time in mutual funds?
So I have 3 pieces of advice. One is that they should seek advice because there is a lot to know. There is a very wide variety of products and there is lots of good help available. So one, they should seek advice. 2, they should start with simple products. In the sea of complicated things, sometimes investors, and you have to realize when you are a first time investor, आपने equity experience नहीं किया है. You haven't seen the downfalls of the market. You've experienced it in your mind, but you've not experienced it with your money. So start with simple, conservative things that you can understand. Hybrid products, basic equity products. There's no rush. Then you can move on to more complicated things. And the third advice is actually start, because a lot of first-time investors just delay things and saying, I learn and learn and learn. This is learned by doing. So get started. Start with a small amount, but start.
Great. And Radhika, I can't help asking this question, but no matter how much we don't like it, but we live in a very gender segregated society. So does this advice change if the first time investor is a woman? Is there any specific things that a women first time investor should do?
So there's no specific product. So all this advice is applicable to a woman. There's one more additional advice I think that's applicable to women is women tend to outsource this decision to other people in their lives, husband, father, brother, etc. My very strong recommendation is please do not. And please do not think it is complicated. Women tend to have a tremendous sense of confidence issue with money. कि मेरे से नहीं हो पाएगा, आपसे हो जाएगा. There are a lot of other things you do in life very beautifully. There's no reason you can't do this.
And I think there is an inherent contradiction over here because we believe that women are better with managing household expenses.
Well, I mean, I have always said that if you look at mothers and grandmothers, they have been the finest savers in the country and managed within limited resources. And the thesis of financial planning is goals. Women understand goals.
Yes.
So, sensible investing is not spending all day talking stocks and discussing quotes of Warren Buffett. It's being reasonably goal-oriented, saving money, parking it in goal-oriented things and sticking to it. That's it.
Great. And that reminds me of one of the first advertisement, what we had over there, a girl riding a bike in Leh. And the background was, hey girl, why do you need a man to manage your money? You can do it yourself. So good that you brought out that point. Should first salary mean first SIP?
It's a great start because what happens is SIP inculcates a habit of saving. It's actually not about the return. Sometimes a lot of young people say, oh, abhi first salary, I have so much expenditure, how am I going to start saving? And I always say on your first salary, the one thing you mandatorily pay is tax. I mean, you have to pay tax.
Yes.
And think of SIP like an investment tax. It's there every month. And you pay tax, you do your SIP, uske baad you start spending.
Great.
And it can be a small percentage of your first salary.
Radhika, I'll share one data point over here with you. So, we have a digital-only brand also by the name of My Money Panda. So, over there, the idea is to reach those pockets which are until now not reached by traditional models. So, one of the very interesting insight was that a lot of housewives were applying for it. They wanted to know how to start SIP. And we, very typical speaking, they were very underconfident ki can we do it? We are a housewife, can we do it? So how do you, what will be your advice for them?
For housewives, I think the best advice is one, if you're a housewife, it doesn't, just because you're not earning, I assume, if you're a housewife, doesn't mean you should not be involved in the family finances, because finally, if there are goals, the goals are for the family.
Yes.
And my advice to people like you, to men who are involved in the process, is to bring your wife into the investment review process. And to the wives, start asking questions in those review process. So review the statement, ask a couple of questions. Gradually, you learn.
Great. Radhika, so Radhika, when it comes to Radhika, the first name that comes into mind is ETF.
Yeah.
So that brings to my next question. Is ETF universally better than mutual funds, or it's contextual? I'll tell you the background of this question. So from our research, we have seen that alpha generation is very tough in large cap mutual funds. But in a small cap and mid cap funds, alpha generation is still there. And in a small cap, I think 90% of the small cap funds are still generating alpha by a huge margin and on a consistent basis.
Yeah.
So do you think it's more of contextual? In some context ETF will be better and some mutual fund will be better?
So I use the flavor ETF and index funds as passive investing. And I don't think there is a rule, as you correctly said. I think the answer is, see, for a consumer, both are options. And
Correct.
they are both different approaches. One is to do what the market is doing, one is to try and outperform. In some strategies and cases, there is a clear landscape where you believe the fund manager can outperform. I'll give you examples. Small cap, as you said, is a great example. Mid cap is a great example. We have an IPO fund. IPO investing, you just don't invest in every IPO that comes to market. It's not logical, right? So in many cases. Now, in some cases, fixed income, actually we are associated largely with fixed income ETFs. ETF index fund may be a great example. So I also encourage investors not to get stuck in very short-term narratives. Sometimes it depends on the nature of the market rally. So I'll tell you, in large caps, the year I joined the industry, no large cap fund outperformed a passive. Last year, most large caps did, because that was the kind of rally. So it's also important to look at these things a little bit more from a long horizon and not buy too much of the storytelling.
Great. And it's a question which is on back of everybody's mind right now: elections. So, do you think election is an event risk? And if yes, how to play it? Or not to play it, completely avoid it, ignore it?
So, if you're a 10-year investor, it honestly shouldn't matter. Election is a short-term event risk, and I don't want to talk about what the verdict of the election is, because I'm not a forecaster. But I think if you look at the India opportunity over the next 7 to 10 years, which is really what customers are investing in, I think that opportunity continues to strand, and that opportunity is not only a political opportunity. It exists because of demographics, because of our migration from $2,500 to $5,000 per capita GDP. It exists because of the magic of entrepreneurship, from small scale to large scale, that exists in this country, and good quality reforms. I think what markets are concerned about is that there is not populism and there is policy consistency. And I should tell you, India, if you judge a company by management quality, India has had broadly good management quality and continuation of policy.
So I remember, reading one article when I was a kid from Swanomics, and he brought up this point only, कि if you look at Africa and India, in 1947 they were more or less similar on many parameters, but we came up very well in spite of no government intent to grow, because we have certain good values in our society and in the way we do business that helped us to grow. Eventually you need value system to grow.
I had a friend who's from an African country, and he had lived in Mumbai in 2008 and 9. And I just met him and I asked him, when you lived in India, what was the thing that surprised you the most? And we always think food or culture or things. And he said, it amazed me that in 2009 in your country, 1 billion people voted and nobody died. And the transfer of power continues to be very peaceful.
Very peacefully, silently, correct. So in our algo that we use for building our mutual fund portfolio, we have this step where we do regression analysis of performance. And we do segregation in 3 buckets. One bucket is returns due to market, the second is returns due to asset allocation, and third one is net selectivity. Now, there have been umpteen studies which have shown that 90% of the returns come from asset allocation. What
Yeah.
is your view? Is asset allocation more important than net selectivity?
So, if you are a customer, for your portfolio, the answer is yes. The primary source of returns is being in the right asset class. For instance, if you were 100% fixed income and chose not to be in equity, then no amount of fixed income fund selection is going to solve your problem at the extreme.
Yes.
Or if you were 100% equity, no amount of fund selection is going to help your downside. So from a customer point of view, absolutely asset allocation, and having an asset allocation that makes you feel comfortable is very important. Of course, once you give me money to manage in mid-cap fund, for instance, I don't take an asset allocation call as an AMC because I know you and your advisor have taken a call. Then my job is stock and sector selection.
Great.
So I always say you do the more important work than we do.
So we come as the second layer, as I always say. So asset allocation, yeah. So now I'll ask you some questions which have come from the clients. One is, what is your opinion about a sovereign gold bond?
Okay.
From Mr. Anurag Bush. And the second part of his question is, as a retail investor, I am not happy with the decision of long-term capital gains on debt funds. Are you in agreement with it?
Oh God.
If yes, why? So he's also assumed that you are gonna say yes to it only.
Okay. Ask me tricky. Sovereign gold bonds is a great product. If you have to invest in gold, it is a fine alternative. The only thing you have to keep in mind, it is not as liquid. Otherwise, it's a very good product if you have to invest in gold. And I always say that if you are investing in gold as an investment product, either you can pick a gold ETF or index fund or an SGP. Financial gold is better than physical gold as an investment product. On the tax exchange, you have to remember I run the largest debt ETF, largest passive debt program, and the largest long-term debt book in the country, and I'm very passionate about fixed income.
Yes.
Unfortunately, while I can have a view on the tax change, I can't do anything about it. So the more important thing is to move on. And I think debt funds will continue to have their merit, especially the long-term ones, because you don't see alternatives to those products in traditional form. And I think for shorter term debt, you have products like arbitrage, you have hybrid funds, etc., etc. So what I can't control, why should I comment about?
Yes. Yeah, and I think you made a very pertinent point ki if you have to do allocation in gold, then SGB or ETF is a good product.
Yeah.
Great. Next question is from Mr. Narendra Madan, who is president of IIT Delhi Alumni Association and my senior from IIT Delhi. His question is, the interest rates have slowly gone up in last few years. Are they sustainable over long term, say 5 years plus? And second part of his question is, will this trend not lead to inflation?
So, if you look at sort of the trajectory we had almost artificially low rates during the period of COVID, and there was a reason for that. You needed to give economies the boost and stimulus to come out of that. That was not sustainable. Inflation in many parts of the world became a problem, especially in some Western countries. I remember traveling to the US a few years ago and saying nothing is viable here. And India, I think inflation never got that out of whack. So interest rate control was there. In the long term, if you look at India, interest rates tend to veer between 4 to 8%. Now, our view is that the peak is about come, so they're going to head downwards.
Great. So Radhika, in Feb 23, we came out with this paper which talked about a relative cheaper valuation of small cap and mid cap, and we strongly started a multi cap study. So we all the time had allocation across small, mid and large cap. And by sheer luck or by expertise or whatever, that has played well. So small cap and mid cap last 1 year has been, returns have been in the range of 40-50%. So that brings the next question from our another client, Mr. Nikhil Kapadia. Should one book profits in small and mid cap stocks or hold on? Should one be fully invested in market, or should one book profits and sit on cash till election?
So this is a very tricky question. I'll tell you why. Because most people do a terrible job at market timing.
Yes.
And I also feel this jumping from extremes na ke aaj FD and then tomorrow equities, aaj large cap, kal small cap, you end up paying a lot of long term capital gains tax in this migration. My suggestion for you is this: with how small and mid caps have moved, see, you can't ignore small and mid caps if you are a 10-year investor, which is by the way we love multi-cap as a category. We think if there's one equity category that's going to be the main one in your portfolio, it will be multi-cap because it has the nice mix of large, mid and small. So I always tell investors, the way to solve this problem is not necessarily to pay a lot of taxes and book profits, but to tone down your incremental allocations to a more balanced product.
Great. So from my senior, let's move to Aditya's senior, my partner's senior, Mr. Subhash Gar, who is again president of IIT Roorkee Alumni Association. What is the best mutual fund to invest into?
So, with due respect, you should reframe the question. There is no best mutual fund to invest into. You should ask the question, what is the best mutual fund for you? Because really I believe that even if you look at you and me, we will have different needs, goals, life circumstances. And that's where people like you guys come in to see. Mutual fund is like a little set of Legos. You build what works for you. And so there's no best mutual fund. There's a right mutual fund for you.
Great. This question is from another of my senior from IIT Delhi, Narayan Khadri. Funds for children education considering they might study abroad and rupee depreciation.
So I have a young child, and we are also planning his stuff abroad. I think with children, it's good to start doing SIPs early. If they have time, then you can be more aggressive. For instance, you can pick small cap funds, you can pick mid cap funds. I have one of our funds called Mid Cap Momentum so you can do that. With my son, what my husband and I also thought is that, if you want to look at foreign education, you can pick an international fund. So either you can pick a US fund or you can pick a fund that is India plus US. Because that's a little more tax efficient today, because that will help you manage the rupee depreciation.
Great. So Radhika, one question from another IIT Roorkee alumni from Aditya. What is your opinion on risk reward ratio for investing lump sum in small caps at present market?
So I think I answered this question a little bit. Are small caps super cheap? No, they're not super cheap. If you're investing over a 10-year period, perhaps it will matter less. But fundamentally, they are a volatile asset class. Today, if you have to put incremental money, I'm more likely to put it in mid-cap. In multi-cap.
Great. So questions are becoming more specific. This question is from ISB batchmate of Aditya. How do you see health of Indian banks?
Health of Indian banks? Certainly much better than the rest of the globe. I think we went through our worst of time in 2012, 13, 14. And then RBI ordered an asset quality review. NIMs have actually, NPAs have come, net NPAs have come down from about 6 at peak to 1 today. So bank balance sheets are actually in very good shape. I should, however, caveat this by saying, especially with PSU banks, these things tend to be a tad bit cyclical. So you have to wait and watch.
Great. That reminds me of one question which is always on back of my mind. Do you think we have, sort of not given enough acknowledgement to IBC and NCRT the way they have turned around Indian industry, Indian banking industry?
I think IBC has been a landmark reform, and it perhaps doesn't get the credit that something like GST or Aadhaar does. But I think IBC NCRT, in terms of their ability to get resolution done faster, have been game-changing reforms.
And I was listening to one interview of Raghuram Rajan where he was mentioning that one of the promoters met him during one of the international conferences recently, and that promoter mentioned, "Sir, हमने ना वो पैसे लौटा दिए हैं." So Raghuram Rajan was like, this guy was never into returning money because they always had this culture कि हाँ बैंक से लोन मिल गया है अब देखेंगे कब देना है.
Correct.
And now people have this culture of returning back the money.
No. I think it's been a landmark reform.
Yeah. So one question from Mr. Ashok Deshmukh. How much gain should we expect out of any mutual fund from the date of NFO? Till when to remain parked on a mutual fund?
So firstly, I should tell you, NFOs are not super special. They are like investing in a regular mutual fund. Let me bust the myth and say a 10 NAV means nothing. So please don't fall for that. It depends on what kind of NFO. And don't invest in something because it's an NFO. Invest in something because the fund has merit. You should look at the kind of fund you're investing in. And the answer will be very different. Is it an NFO of a thematic fund? Is it an NFO of a tech fund? Is it an NFO of a mid-cap fund? Or is it an NFO of a balanced fund? And just because it's an NFO doesn't mean it will give you higher returns than an existing fund in the same category.
Great. But are there any benefits that an NFO offer as compared to a regular mutual fund?
So it really depends. Sometimes people tend to paint this with extreme brushes. All NFOs
Yes,
are bad,
yes.
all NFOs are... There's no such answer. I
Yes.
really think you have to look at things on a case by case. Sometimes you see very innovative products come to the market for NFOs. Sometimes NFOs come at very good times.
Great. Great. One last question. Balanced advantage funds. For the benefit of our viewers, if you can just dwell upon a little bit how balanced advantage funds can be used for surmounting market volatility.
So that's my favorite category of fund. I will say balanced advantage fund is like a one pot meal. It's like Indian khichdi, dal and rice in one meal. And one of our greatest needs as investors is we want market upside, but we don't want to take too much downside.
Yes.
That is the basic need that a BAF solves, that there is equity and debt in one product, and a model usually decides kitna equity, kitna debt. I personally use a lot of them in my portfolio. So for many Indian investors, first-time investors, retirees, conservative investors, that need of बचत है बुरे टाइम में लेकिन बढ़त भी अच्छी है is solved.
Great. One of the most dreaded questions that we people always have to face, and we have to face it. Your prediction for next 1 year.
If I could have a prediction for the next 1 year, I would not be sitting here. I would be an astrologer, and that I'm not, so I'm not going to give you that prediction.
Yeah.
But I do predict, and I think this is a reasonable prediction, that sitting at the end of the decade, India would be the world's third largest economy. So, and I think we'll all be beneficiaries of that.
Yes. So I always keep on quoting this number that 10 years back we were 11th biggest, and now we are on, I think, 4th or 5th.
Yeah.
And soon to be third one only.
Yeah, so exactly.
In fact, recently on stock markets also we became 4th largest after recent routing.
We've gone from micro cap to small cap to mid cap to hopefully large cap as a nation.
Yes. Thank you, Radhika. As always, a real pleasure talking to you. I am sure our audience will benefit a lot from all the gyan that you shared with us.
Thank you.
Thank you once again.